link, and you can also review this at your leisure. Can I have a show of hands to how many of you have heard of Z-Score? Pod, if you could please let me know comments how many actually heard of the Z-Score or the Z-Score. So I should actually say Z-Score instead of Z-Score. Or over the weekend, you might have heard about a big bankruptcy looming in Latin America. OGX, that by Ike Batista. So, okay, good. But many of you know about Z-Score, but you also might have heard about the present for bankruptcy by Ike Batista's OGX, the commodity company in Brazil. So over the last 4 or 5 years, starting from 2008, you might have also heard about General Motors, Chrysler bankruptcy. You might have also heard about Airlines bankruptcy. You might have also heard about one of the legends, Eastman Kodak, for bankruptcy earlier this year. So, understanding when a company will potentially go bankrupt and time of that is very, very important. And Z-Score actually allows us to identify, predict bankruptcy in advance. So today explaining what is Altman Z-Score Plus, what are the benefits, features, various credit scoring methodology, trading systems, Altman Z-Score Plus Bloomberg application, desktop, mobile, web, and web services. And I also give you a quick demo of how to use this product on the platform. So Ed Altman, he invented the model, the Z-Score model, to manage the long-term solvency of the industrial firms back in 1968. And that model really became a lead industry force to predict bankruptcy of the companies. And over time, this model to Z prime, that is to analyze the bankruptcy of U.S. private manufacturing. The original Z-Score model were U.S. public manufacturing firms, and the Z prime is for U.S. private manufacturing firms. And in 1993, he modified the model further. He called Z double prime, that is to analyze the non-manufacturing companies and emerging markets. Whenever we are analyzing any of the companies in East Asia or anywhere else in the world, Z double prime score is applicable to those companies. And 2 years ago, Professor Altman asked me to test the model. We are calling the enhanced model on Z-Score Plus, and it made 3 significant enhancements. One, in addition to the scores, we are estimating a bond rating equivalent, and this is very, very important for private firms or firms that haven't issued debt to predict 1 year's probability of default, both for existing bonds and loans and for new bonds and loans. And in subsequent slides, I'll explain what is the difference between those two. Also, able to rank the companies within and across the industrial segments itself. The Z-Score Plus or insights be traditional Z-score. So let's take a pause here and ask if you have any questions from your side. In that case, I would like request you to type them into chat session so where I can answer them. So I'll take a pause here and see if you have any questions. Okay. Fields are many, but the ones are to analyze credit risk, to set investment opportunities, develop trading strategies, identify turnaround opportunities, use a bond rating equivalent for pricing and for valuation purposes, monitor long-term solvency, get supply chain risk, and mitigate account receivable risk. From your standpoint, I think what is important applicant is monitoring the long-term solvency, maybe to identify turnaround opportunities, or maybe to use the bond rating equivalent BRE for pricing and valuation purposes. And the of Altman Z-Score Plus are to analyze credit risk of public companies and historical is compare two or more companies and credit risk of a portfolio, or you can enter the data or supply the data and that way analyze the companies as well as for the public companies. And the audience are many within financial sector, even in the legal sector, bankruptcy reorganization lawyers, they also use it, and corporate officers also use it. Primary users are within the financial sector. What's the scoring methodology? First of all, we have to identify which model is actually applicable. There are three models, as we said. One is the score model, second one is the prime score model, and third one is the Z double prime score model. If the company is a US proxy company, the Z-score model is applicable. If company is a private manufacturing company, the Z prime score is applicable for the rest of the companies, which includes the US non-manufacturing and international companies. So Z double prime score company. In case you are analyzing a company which is listed or which is operating out of the Southeast Asian countries, then the Z double prime score is actually applicable. Once you make a determination to model is applicable, either Z score, Z prime or Z double prime score, models need some data inputs, and the data inputs come from the balance sheet as from the income statement. If we are considering a Z-score model, in that case, market value of the equities, that means the share outstanding and the stock is required. So, in a nutshell, the input that is required is the net working capital (NWC), which is called assets the current liabilities, which from the could be most recent balance sheet. At a point in time, we need the return earnings. So it's again from the balance sheet. So the Z and the Z prime score model, we also need last 2 months of sales figures or LTM sales figures. For all the three models, we need last 12 months of EBIT, earnings before interest and taxes, value of liabilities. Yes, of Z-score model, the market value of equities is what is of the Z prime and the Z prime score model. the book value of equities is required. In case of all the three models, we require the total assets. In case the receivables assets is available, we apply that. We calculate the score using the net tangible assets. Otherwise, we use the total assets. We supply the data to the model and we have a score. Using our benchmarks, we really estimate a operating equivalent of the company. Again, using the marks based on the industrial classification of the company, we also rank the company with its industry and also across the industry, such as if it is within the chemical industry, metal industry. So we rank the company to what is the percentile ranking within that industry. Also, the company within the say overall manufacturing sector or overall manufacturing sector. So that way we estimate the bond rating equivalent. So rank the company within the industrial sector. But another important improvement that we have made is predicting the default probability. We predict two types of default probabilities. Is for new bonds and loans, and it is for the existing bonds and loans. And I'll explain the difference between the new bonds and loans and the existing bonds and loans in a subsequent slide. Again, these are the cumulative default probabilities. Here are three formulas for Z-score, J prime score, and double prime score. There is one thing I have to point you is on about the Z double prime score, and usually a factor of 3.25 we are adding to the double prime score. And the question is why we are actually adding the 3.25. Professor Altman actually covered the double prime scores for a lot of companies, and he attempted to standardize the scores. And what he did, he said, okay, for Z double prime score of a company in default equals to 0, and based on the observation, he actually added 3.25, and there is no such factor is actually added to Z score or Z prime score. And here the units, say units of the numbers, balance sheet numbers or the income numbers, they don't really matter because we are all in ratios, as you can see, but they all need to be in the units, millions, billions, thousands, whatever you're using, but they need to be consistent across the board, except the space need to be in actual units. Remember, if you are achieving a Z double prime score from Bloomberg terminal, in that case, the 3.25 is not added. Another note about Bloomberg terminal, whenever you are obtaining a Z score from Bloomberg terminal, it is considering net tangible assets, that is the total assets, the interest. So those are the two observations about the scores to the out of Bloomberg terminal. Observations about the data, the net working capital can be negative. You ask how the net working capital can be negative. Well, the working capital can be negative. We have predominantly seen in case of auto company. If you open up the balance sheet of General Motors, balance sheet of Ford, over a period of years, you will see that the net working capital quarter over quarter is sometimes negative. What that means, the companies are using more and more vendor financing. So that's what it means. So that is an important observation. Secondly, the EBIT, earnings before interest and taxes, then also what that means is there is a net loss. The return earnings that can also be negative. So that means is either a net loss or maybe company is paying higher dividend than net income. And so I don't understand why the company would be doing, but in some cases we have seen that. How do the credit rating agencies such as the S&P, Fitch, and Moody's, they do the bonding? So compared to ours, in each of ours we have the scores: Z-Score, Z-Score, double prime score, and we compare the scores against our benchmark, and now we basically determine or the bond rating equivalent of the credit rating agencies, which is universally followed. There are two types of risk they take into consideration for bond rating. First one is financial risk, and second one is the business risk. In case of financial risk, the core of the credit rating comes from interest coverage ratio, that is ability of the company to service the debt. And today, or over the weekend, we have seen the OEX, the company owned by Ike Batista of Brazil. It is having that problem. It is unable to service, I believe, $300+ million worth interest, and that's why it is getting for bankruptcy. So the ability to service debt is very important, which interest coverage ratio, which also the EBIT before interest and taxes divided by the expense. So that ratio is interest coverage ratio. If it is say it's higher, it's great. It's too higher, it's okay. If it is 1, might struggle. And if it's below 1, then it's in trouble. It depends upon the cash structure of the company. And also the cash flow adequacy. So last April, Apple actually issued a $16 billion debt. Debt was sold very, very quickly. So with $3 billion revenue coming quarter over quarter, so we don't see any issues with cash flow adequacy. There's plenty of cash, and it just sold like a hot cake. So now risk, the business risk. The business is the say change in political climate or any other things happening. So those are country risk. Industry characteristics. So certain companies are the way the business is. They have more assets. They have to get more debt. So in case of airline industry, they need heavy fixed set to begin with. But of a technology company, software company, it doesn't need that much of fixed asset to begin with. So competitive position. Of course, if the company is positioned as number 1, number 2, number 3, then it's much better off to compete compared to the number 7 or number 8 whole industry. So profitability compared to the peer group. If a company is profitability higher because of efficiency, control, or better technology, or intellectual property, so forth, so that is seen favorably. And so typically, look at companies with more than one product, more favorably than a single product. There has been one exception. There is a company called WD-40. Also type that here. So WD-40 has only one. It is lubricant, but the company has been producing that for 40 years, but with only one product. You would think that it's not going to weather storm or economic ups and downs, but this has held up pretty well. What is the more diversified the company products are, it is looked at more favorably. The second is then the final one is litigation. So there is a big litigation overhang, then the company is not looked that favorably. So 1995 and all that, there was a lot of lot of litigation against the tobacco companies. So if you had looked at their balance sheet that time, they had a lot of liability come out from the litigation. Maybe now it continued to have a big litigation expense arising from the Bhopal tragedy. And if there are a lot of lawsuits right now against the JP Morgan Chase, things actually happen. So they are having a lot of research. So the litigation, the protracted litigation, that is negative. So I had referred to the existing bonds and loans and new bonds and loans probability of default PD in some of my previous slides. So now let's take a look at them, what they really are. New bond and loan PD. So this based on Professor Altman's mortality rate approach. What he's done is he's observed the based on his historical experience over the 2,500 or so defaulting funds over the last 40 years, a mortality rate approach. So looking at a company as a newborn baby, and what is the mortality rate of a newborn baby, which is followed in the insurance industry. Similarly, how the new issues have defaulted over time. So based on those observations, the newborn loan PD is determined. And the existing bonds and loan PD, for example, the companies have issued scheduled debt. That means they have issued debt before. In case, how those scheduled debts have performed over time. So those PDs have been categorized as existing bond loans PD. So when you use bond loan PD and when you use the existing bond loans PD. So fully issued security, or the company who hasn't issued any debt, and they're looking at that, in that case, the bonds and loans PD will be more relevant. In case the company has issued debt before, in that case, existing loan PD will be relevant. And receivables case, you can actually use existing bonds and loans PD. Here is a pictorial of what was happening before and what is available now. Professor Altman came up with the Z-Score model. Everybody asked him, okay, you have a score. What does score really mean? So they came up with some guidelines. If the score, Z-Score, we are not talking about the Z prime, we are not talking about Z double prime, but we have those breakdowns on our website in case you are interested. For that score, he said if the score is below 1.81, that means in a danger zone, and probability of the company has a high probability of defaulting 2 years. And if the Z-Score is above 3.0, the company is doing great. No such default probability within 2 years. If the company's score falls between 1.81 and 3, then the default cannot predict it. So that's how the old the bank were. So the enhancement that we have made here, score is, this is for a U.S. public manufacturing firm. So it's 4.47. That actually equates to a rating that equates to a. I have actually muted the lines, but I can unmute if you like. Just type it up. I'll do so. Then say 4.47 actually trust to a bond rating equivalent of an A plus. Your A plus is S&P type of nomenclature, and one is your Moody's and type of nomenclature. That translates to percentile ranking within the industry is 76%. And then we look at default probability. So 1 to 10 years of cumulative default probability for in bonds and loans, and also for the two bonds and loans. So bonds and loans, they typically for the first few years, their default is a little bit better. Existing bonds and loans, but they kind of cross the lines. Applications of the bond rating equivalent from a valuation point of view. If you're putting a enterprise value on the company, so the rating equivalent can be used to drive a discount rate by adding a market risk premium or MRP, and you can also add a spread to bond rating equivalent to come in pricing. And depending upon the bond rating equivalent, you can also develop an investment strategy such as a put option, or insurance purposes. You can also with a premium structure. Various methods, discount cash flow, etc. I will not actually cover that, but if you have questions, I can answer those. The way to actually come up with a discount rate. There are various ways to come up with a discount rate when you are coming up with enterprise value. Bond equivalent plus risk premium, that is one way, like weighted average cost of capital and CAPM. So I will not cover those, but in case you have questions, I will answer those. How we discount the flows, free cash flows back to the current time, and we add a terminal value to the company, and in that case, your bond equivalent can be used with market risk premium as a discount rate. How to come up with free cash flow, I will not go over this, but if you have questions, I'll address that. Put option. Say you are a portfolio manager and you have invested in a stock, you have purchased equity, so but you have some doubt in your mind that the company will survive over the next 2-3 years. In that case, to protect your securities, you could actually purchase put options, which are standardized options available in certain exchanges. So using the put options, you can actually cover your positions within that time, within duration time. Your price falls below your exercise price. You can always exercise and get your money back, but you also have to pay a premium to purchase the put. Put and pay chat if you are interested. We can go over those. And the scoring system. So you are a heavy financial user, you are a banker, you are a trader, you are a portfolio manager, risk officer, etc. In that case, and you are dealing with securities across the world. In that case, your bug power up may be valuable to you, because of you all the public company data across the world. Typically, Bloomberg terminal, Reuters terminal, they are predominantly huge, but in this part of the country, Bloomberg terminal is predominantly huge. And if it is a matter of convenience, you would like to analyze the company on the fly, there are mobile products available on Android, BlackBerry, as well as on iPhone, iPad. In case you are going to use the product, the desktop or mobile desktop or the web products are actually useful. In case you need to integrate the scoring, bond rating equivalent, property of default, etc., to the back end as a batch, then your web services can be useful. For Power Lab, so the Bloomberg has access to worldwide data. So today, Bloomberg terminal using the AS command, you can actually obtain a Z-score of a publicly traded company. But using that, you can really come up with a bond rating equivalent or a percentile ranking or a probability of default. And the three additional the enhancements that we have made on top of the score. This is how to get to product block terminal, the apps space Altman and then hit go, and then you will get to the trial. We actually subscribe data from a company called Xignite, and through that we have obtained close to 6,000 industrial companies data for USA and Canada. More than 3 years of history is available, so you have the score, bond rating equivalent, and probabilities. But yes, you are looking at analyzing a private firm, or you are doing a what-if analysis. In that case, you can enter the data manually to the system, or you can also upload a file, and that will also process for you. And this is available you can integrate to your systems, or you have a system. You also have a button that can actually obtain the data, process it, and then display the result. And this is pretty easy to integrate with the systems. It is agnostic, so you can actually use multiple technologies. Okay. Can we analyze Pakistani stock market data? Yeah, we can do that. In that case, you have the data, you can actually enter it. But if you have a Bloomberg terminal, you can also enter it. Give me one or two symbols so that I can look it up. At the end, we can actually do it and look at it. Okay. But look at the Pakistani companies, so that's not an issue. We will use the Bloomberg terminal. At the end, we'll look at it. A little bit more about the web services, how it works. So the backend or an online system. Okay. We'll look at the company trading in an exchange towards the end, but service can be utilized for batch processing and also for the online processing. And here are some functions. You can go through them, and if you have questions, I'll address them. So let me switch over a little bit to the terminal, but this is also a good time for me to stop and take questions. Then I will show you some examples, and I will also take few symbols from you and analyze. So okay. On a PB, let's look at that first, then I'll take a question. Okay. Okay. Let's see. I'm going to see if I can get that here. Okay. Okay. One situation here. The alt Z-Score models, whether it's a Z-Score, Z-Prime, that does apply to financials and banks, insurance, etc. To non-financials, such as industrials. The Pakistan style is a good one. So, do you have a ticker symbol for that? Okay, let me look into here on terminal. Okay. We have a ticker symbol for Pakistan State Oil. Okay. I have PS. Yep, I got it. So so equity. Let me analyze here. Yes. So yeah, equity. I got that. I'll show you now. Let's see. Okay. You see blue screen. Okay. So this is in oil sector, petroleum sector. Let me go on here. Okay. It looks like this is okay. So why is 4.74 and Z double prime score should be 175 plus 3.25. This will be 5, and what we see is this B1 B plus, and I haven't really analyzed. Sorry, B1 uh, B plus. That's what it says, and as before, explain. What it means is we actually took the financials from Bloomberg, and it actually created a score, a Z score, and a Z double prime score. And the Z double prime score is relevant for the company because this is a industry firm. It is in the oil sector, sector. This is a non-US, but it is in the petroleum sector. Therefore, the Z double prime score is applicable, and we actually ranked it within the company. The petroleum sector, the percentage is 18%. Oil manufacturing sector is 32%. It translated to a bond rating of B1 B plus, which is good, and then we see the negative default probability over 10 years. So that's what it means. We went from a zero prime score to a bond rating equivalent to percentile ranking and PDA. So does that make sense? Sure. So welcome. No problem. So any other companies you would like to look at? To analyze any other companies in this, I can also run through it. Okay, let's do that. FATIMA. Let's see. Okay. Okay. And in the, we'll say, chemical sector, yeah, what happens, we have some broader categories. So I know while it is in fertilizer sector, we don't have a fertilizer category. What we have is the broader categories are secondary, chemical, petroleum, like that. So we don't have any further breakdown, but that only affects the ranking, but it doesn't affect the bond rating equivalent. It affects the default. So the industrial classification primarily affects the percentile ranking, but the bond rating equivalent is determined based on the private sector, the manufacturing versus non-manufacturing, and versus non-US, public versus private, and those type of things. And because of its bond rating, its default probability is slightly higher. Okay, so if you don't have any other tickers to analyze, what I would like to do, I'll just briefly show you two features and then get back to answer your questions. Okay, say you want to analyze the trend, historical trend of a company, and this is for Alcoa, aluminum manufacturer Alcoa, and then this is showing over time how scores and have actually progressed. If you want to compare companies, so you want to compare General Motors versus Ford Motor Company, and usually compare the companies, the scores, default probabilities, and how do they compare. You also analyze portfolio, but the portfolio need to be built inside the Bloomberg terminal. Then you can actually analyze the portfolio. You can also analyze a score. If you have a score of a 5, and you say this is in the petroleum sector, so then you can come up with the rating equivalent and default probabilities. Here, you can actually enter the data for a company, and you also entering the data. And this can be used for private firms. It can also be used for what it is. So you can analyze 3 years financials, you can analyze a financial file, you load the data and analyze. So what we have covered is we have actually covered the scores, how to calculate the scores, J prime score, J double prime score, and how to estimate bond rating equivalent, how to rank the company, the percentile ranking, and how to predict default probabilities 10 years into the future. And application offers both training and capabilities. It is simple and easy to use. Now, I'll actually pause and I will see what questions you may have from the side, and I will answer those. So I would request to type them into the session, and I can answer them. Okay. Have questions? I would like to answer those questions. Go ahead. Okay, this is that is a very, very valid question, and I will also give you the case of Alcoa. In case of Alcoa, I'll just show you briefly. So see the reputation is different from financial abilities and default probability. In 2008, General Motors and Ford, General Motors and Chrysler, they both for bank, and they were really only every mutual retirement company and so forth, and their reputation was also great. So the reason is quite frankly, I hadn't analyzed this company before, so I didn't really know how it will evaluate, how it is going to equate as a bond rating, or how it was going to equate otherwise. Reputation is one aspect which definitely important, but we have to analyze the financials independently and see where it stands. So I will also give examples of Alcoa, and in Alcoa it is still below investment grade. It's actually not real time, but it is up to the most recent quarter. This is actually coming from Bloomberg. I just showed you Bloomberg data. What I can do offline, I can actually take a look at the Bloomberg data and give you a snapshot, if that's okay with you. And I'll write them and see what Bloomberg has. So Bloomberg have the most updated data. And I'll send you the details. Okay. Any other questions? Okay. Waiting for your questions. I think I have the complete presentation. So any questions you have, I'll be happy to answer that. Okay. Okay, go ahead. The role. Professor Altman, he is the inventor of Z-Score model. Inventor of Z-Score. Inventor of Z-Score. Invented in 1968, and then he made changes to initial model was for the Z-Score U.S. public manufacturing firms. Then he made changes and came up with Z-Score and U.S. Private manufacturing firms. Then Z prime is for private, and Z double prime. Sorry, Z double prime for U.S. non-manufacturing firms. And he not only is the inventor, he and I partnered to come up with a Z-Score Plus and the marks. See, we derive the bonding equivalence from the source. Same thing, the default probabilities from the bond rating, and those benchmarks are also coming from Professor Ed Altman. And does that answer your question? The one I just showed you is actually coming from Bloomberg. I'm actually using the Bloomberg terminal in the background, and the application is available inside Bloomberg terminal, but this is also available outside. Yes, you have your own data to print. You can also upload a data file, or you can also enter the data into a Tinkercell. See, the situation about Bloomberg terminal. See, Bloomberg terminal is expensive. Costs say roughly this money per year, and this is actually prohibitive. In that case, we also have a web version, so you can actually use that. But since we don't have the data for the Pakistan companies in our database, yes, you have access. You can actually enter them, enter data manually, or also upload a CSV, Excel file to the system. That way, you'll actually analyze the data for you. Do both, enter data manually in case you have them, or also upload a data file. So, Bloomberg terminal, in case somebody is having Bloomberg terminal, it makes sense for you. But just for the purpose of analyzing company going Bloomberg terminal, this is pretty prohibitive proposition. But the other options are also available. And if you set up a batch process or something to analyze, you can also use the services. Okay. That's fine. Okay. You see, this is available inside the Bloomberg. In case you have Bloomberg, you can actually it is actually available. So if this in Bloomberg, you will actually see this, and also available as the add-on. So it does the back end. It actually gets the data from Bloomberg. So have a Bloomberg terminal, then you can get this add-on. You can use it. Also, you can use the non-Bloomberg version, but you can also download data from Bloomberg. The way to download is, I'll just show that to you briefly. Say, okay, if you do FA, that the function is FA, it will actually give you the course. What we done is, we have actually built some custom functions. Say here, okay, get double prime, for example. So we fields, we have built this, and you also download this and enter to the application. So there are two ways you can get it. If you have Bloomberg terminal, then you can get it an add-on. Everything will happen automatically. If you don't have Bloomberg terminal, you can get the non-Bloomberg version, enter data. If you get a non-Bloomberg version, you can also enter the Bloomberg data. So let me just type it up here. Bloomberg terminal plus add-on or the number version. Okay, so analyze. If you remember, you can get the add-on. That's the easiest thing to do. If you have Bloomberg, you don't want to get add-on. That's also okay. You can get non-Bloomberg version. Okay. The cost, there is a Altman Z-Score Classic. And iPad and Android. You have then in that case, you just enter data, upload a file. So it's not automatically available, but if your data, you can actually enter it. Okay, question? Actually, but yeah, in that case, if you don't have the data, but doesn't the don't file on a quarterly basis or annual basis with the stock exchange? So in that case, you will be able to get the data directly from the stock exchange. Yeah, it should really analyze. If you have Bloomberg or something, you can obtain the data, or you can actually get it from the company website. A lot of times, they also list the financial report. No, the way it is Bloomberg terminal. I mean, we cannot really distribute Bloomberg data, so that is a restriction that we have. But if you have the Bloomberg data, or if you can obtain the data, you can use it. So does it make sense? I would actually look at company. Okay, let me elaborate. You to analyze a company, see obtain the data in case you want to use version. So the company website, list the data, list report source or company we may file a report with the regulatory authorities. And data from them. In case you want work terminal, you can always obtain the data from work terminal. Always you can use it. Does it make sense? Okay. Any other questions? Okay. If no other questions come, it is a great pleasure for me to speak with you. And if you have any other questions, please let me know. I have recorded this presentation. I will send a link to Jafar, and he can make that available with you. But again, it's a really great pleasure to speak with you. Thank you very much. And with this, I would conclude the presentation. Okay, bye.